get to the bag, ayy. Got the foot on the gas, pedal to the metal when the lane moving fast, ayy, ayy. Let them all cross. If they hate, then let them hate and make a bigger boss, ayy.
This episode is brought to you by SPI Logistics, the premier freight agent logistics firm in North America. For over 40 years, SPI has been diligently building the most successful freight agent network to provide first-class relationships for our shippers, receivers, and carrier partners. We are more than another transportation network. We are a dedicated team of professionals united by one singular purpose, and that is to expedite our agents' success. All of our agents are set up for success on day one, as they are provided with a full suite of support staff that is ready to assist them with everything from after-hours emergencies to financial and administrative needs on a no-fee basis. This way, you can focus on continuing to grow your business. There is no financial risk to start, and you have the ability to earn up to 75% in commissions. If you are looking to take control of your financial future and build your business with the backing of one of the most successful logistics firms in North America, visit www.spi3pl.com to learn more. Do me a favor and let them know that the Freight Coach sent you. Hey guys, before we jump into the episode, I wanted to let you know it is brought to you by Denim. As a business owner myself, I personally know the importance of financial stability and preserving cash flow to help navigate through any freight market. With Denim's comprehensive service offering, you now have an all-in-one financial partner whose platform includes factoring, payments, freight audit, document collection management, and analytics, which help keep your business financially healthy and increase your team's time to focus on revenue-producing activities. You can also take advantage of Denim's free credit check, which they perform on all of your customers, and Denim will proactively reach out to you if they spot any signs of credit deterioration. Finally, Denim always pays your carriers first. As a broker, this is imperative to preserving your credit score in the market, which ultimately helps you become a broker of choice to your carrier partners. Are you ready to learn more? Visit denim.com to schedule a demo today. Just do me a favor and let them know that the Freight Coach sent you.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Podcast, the top podcast in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines. But most importantly, you guys provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I do say that before every single show. And what I mean by that is I only speak with transportation professionals, because at the end of the day, I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve. So you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. Happy Friday, everybody. We're going to jump right in. I got a very special guest for you guys here today. We're going to be talking about, from strategy to scale. When you're growing inside of your business, what do you do, right? Like, I think that there's multiple stages that a lot of people go through, but especially with founders, you go from, I just need to start making money, to you start bringing on some customers, and then you transition into scaling out from there. And I got my man, Anthony Petitte, back on the show. Anthony, thank you so much for taking the time to join me today.
Thank you for having me on. It's been a while since we, had our last call or conversation.
Yeah.
I'm very excited to be here and, of course, share insight and information to the audience to give you more information on, what we're going to talk about, transformative growth strategies, looking at a startup company all the way to middle market. We can even get an enterprise, but I think at that point they have a team around them to get them to the next level.
No, that's it, right? And I think it's very important to put out there, you guys. Anthony has built and sold companies before, all right? Like, he's been through this process, and that's why I always love having you on. I like, because it's like, I had somebody on the show a couple weeks back, and I told him after we stopped recording, I was like, man, there's just something about, I'm like, you have founders energy. And there's such a difference. And when you have those people who are out there who've got everything on the line, who've been down that process, they just operate at a different level, right? And then it's like we all kind of draw from those same parallels out there, because we all have that experience of that aha moment of like when things started to click. And it's like, it doesn't matter how much experience you have in the industry where you're starting your company from. When you start a business, you're starting from scratch, right? Like, you're starting from zero and you're figuring things out as you go up there. So dude, like, what are some of those things that in your career, whether it's in your own personal experience or the companies that you're advising for now, where it's like, hey, we have our proof of concept, we're getting customers coming in, but like, we want to become more refined in what we're going after and the direction that we're taking our company?
I look at deep impact work. So what that means is generating full economic value for returns. And, it's for right now in my career at this growth stage, I'm working with companies that are middle market. They're already off the ground. They already have customers. They might not have enterprise customers. They have, middle market customers or even lower, right? Just to get them off the ground. But when I really come in, I'm looking at that value creation or that value chain. The value chain is essentially, in other words, a playbook, and it's how a company is going to be successful. It's how a company is going to grow. It's looking at, the operating expenses, capital expenses. It's looking at, what type of company this, these founders, whether it's a group or an individual, what they want to be when they grow up, right? Like that's also part of that equation. It's also looking at, let's say you are at the ground floor, and I've been there, right? Where do you first start? I heard you earlier, and you quoted that a lot of companies are really that early on-site, on-stage, mindset of, I just want to make money and that's it. But it's not about just making money. Again, it goes back to what I was saying, the value creation. How does my company create value for my customers or for my channel partnerships or for my, team itself, right? The individuals that I hire. So another thing that companies also look at, part of that playbook, is like my talent acquisition. Who am I going to bring on that's going to help my company build from what it is today to the next level? And also identifying what is that next level. That next level can be different based on any company, their size, their organization, their demographic, their geographic. So you really want to go in there, and when I say go in there, like have the conversations with the CEO, sometimes the board, if they even have a board at that point, and then and have a conversation and saying, hey, like, where can I help you? And where can we, from the very beginning, where can we both create value, and where can we go from there?
How do you help them stay on the path of like keeping it simple, but also planning for the future? Because I know, at least me personally, what I mean by that, Anthony, is I think that at times we overcomplicate what we're actually trying to do in the product or the service that we're trying to put out there. We want to sound really intelligent about what we're doing, but I have just found in the businesses that I've grown that the more simple my approach in my customer outreach and my prospecting, the greater the return that I've had, because my messaging is very clear. It's very concise. Here is who we are. This is what we do. This is the service that I provide, or this is the value that I add out there to the market. And it took us a long time to get to that point, right? Because again, when you're chasing revenue early on, because I don't care what anybody says, every startup is chasing revenue early on, whether they want to admit it or not, whether you have a war chest of VC funding, everybody's chasing revenue to start. And I have just found, at least in today's market, in today's environment, the shorter our pitch, the greater the return in like what we're trying to accomplish out there.
Look, actually, that's a great point that you make. I heard from several people, I think it was this week, and I read on LinkedIn, and then I've listened to some podcasts, but they're all talking about having a war chest for venture capital. I would say anybody on here who's building a company, you don't want that. Honestly, what you want is, again, going back to value creation, you want revenue quality. What does revenue quality mean? It means that you want to focus on bringing your customers in. You're going to want to look at margin, right? Like, let's get higher margin, of course, so that your company could be profitable. Don't bring too much capital in day one, because then you're just going to be snowed in. There's a lot of companies out there, I'm not going to name them, but I think we all know who they are, and they're mirage, they're mirrors. And at the end of the day, you don't want to be a smoke and mirror company. You want to be a company that's building foundationally and fundamentally from the ground up. And how do you do that is by getting your day one customer. It doesn't, again, have to be middle market to enterprise. It could be a lower middle market. It could be a smaller startup company as well that's just trying to grow themselves. That might give you a lifeline or be your anchor to growth. But you really want to start at the bottom, because that's how you're going to build. That's how you're going to see growth. And then eventually you can go back and raise capital. But I would never look at, the companies that say, well, I'm in my seed round and I raised $15 million. That's too much money. It's too much capital. You likely have given up some sort of controlling interest to your company. You're no longer essentially a founder because you've given it away. And so again, I'm being very obsessive in nature. It's natural arbitrage of me having a conversation about that value creation, but that's the key principle in building any company from the ground up.
I agree with you, Anthony. My stance is, and again, you guys, Anthony, when he's not saying here is like he's been in that situation before, and like how things have kind of played out for him over his career on having those conversations about raising capital and everything else. And there's a difference between somebody who's been in the room and walked the walk than somebody who's read an article on social media and is now trying to bring that opinion to the market, right? Like Anthony's been there before, and I look at it is because for me, my ultimate goal in everything in business, Anthony, is freedom, right? I am chasing the freedom to do what I want when I want. And in the sense of like also not having to answer to anybody. And I'm not against people who raise at all. I get it. Everybody's going to do their own thing out there. I just want I believe in my vision so deeply, Anthony, that I know this is the winning strategy. I believe it to my core. It's going to take us longer than some because like I'm not going to raise money or take on investors. I would rather like the growth that we're going after is like I would rather take on personal debt myself to acquire a company to grow than give away 20% equity in the future for a couple of dollars today in the short term. And I'm very fortunate in the position that I'm in right now with just this show. The founders that I've talked to and interviewed on this show over the years, all of them have alluded to what you're talking about there. I know some guys that have bootstrapped their companies up that do hundreds of millions of dollars a year. And they're like, yeah, it took me 8 to 10 years longer than I wanted it to. But guess what? Today, I own 100% of myself. I don't have to answer to anybody. And that's just kind of like what sticks out to me is like, if I'm going to go and grow right now, I will take on debt. I will finance it. I will take out a loan from the bank and acquire a company and do it that way than I would to like take on investment to acquire a company or to like, go out there and then put it into like, building out my product that way.
Yeah. I mean, let's go back to the basics, right? I mean, you mentioned earlier that I've been there, and I have. I've been at the lowest point, right? Not even knowing at the time how to go out and get a customer, right? Started my first company, Truck Park, when I was 26 years old. So I had no idea of even building a business. I just had this dream. I had this vision that I wanted to create value to the customers. I want to create value really to the truck drivers at the time, right? The owner operators, independent drivers that were just on the road and they could not find parking. So the platform, the marketplace that we eventually built was the control tower, the visibility tower to where this parking was demographically and geographically. And so with all that being said, it was a struggle. Like, I think, I don't know what the listeners like in terms of, class on here, if they're middle market companies or they're like solid startups or they're just, dreamers or visionaries, like they're starting at, scratch with like, what's my name going to be? And do I go on Canva to make a logo? Right.
Yeah.
If you're starting from there, that is something that is critical. It's mission critical, in fact, to wanting to really build a company and get to that transformative growth. But also don't feel like you have to immediately take on an investor or immediately take on, a massive customer, because that might take you a year anyways to close. Start looking at some of your friends and family, like your buddies that are in the industry. Like, how can we partner and create value? Like, how can my company be essentially, groundbreaking opportunity for your company to grow, and you grow together and you're going to be very successful that way.
Yeah. Bringing on large customers early on can actually be kind of a death blow if you don't know how to service them, in the sense of like, again, it's like that. I look at, the Pareto principle is a thing, it's a very real thing for a lot of people. And that's, the 80-20 rule out there. And I think a lot of companies get into it, Anthony. And I know that this is very true inside of transportation, whether people want to admit it or not, that like 80% of their revenue is tied to one or two shippers only. And then like they've never grown outside of that. They've grown with those customers, right? And their businesses have grown. But like that, to me as a founder, that scares the shit out of me. Is like when, and there's a difference between a startup. Obviously, there's going to be a point in your growth where you might only have 2 or 3 customers that you're working with. So that data is kind of skewed. But like one thing I'm very cognizant of as we are growing is like, how do I reduce my risk at all costs? And what I say that is like, I want to get it down to where it's like my customers aren't accounting for like more than 25% of my revenue. Or, like I want to get it lower than that, right? Like I want to add other shippers and customers to where it's like 20, 15%. Every customer that I'm working with only accounts for 15%, because I don't operate in the pie in the sky mentality. I operate in reality and the reality is there might be a drop in revenue. Like you might not be able to service your customers at a certain level, and they might look for a new provider at that time. And then that loss of revenue could put you out of business, right? So as awesome as it is to get customers, and that's why I love having Anthony on right now to talk about this, right? Like we're talking about like when you get that established revenue coming in, how do you reduce that risk? And then how do you take that next step? Because, eventually you're going to get there. Eventually, if you follow your systems, your processes, and building revenue up, it's going to come as long as you're doing the work. And when you get there, it's a completely different ball game, right? Like the strategies that you apply to make your first 100 grand are extremely different of when you're, getting your 7 figures in annual revenue. And then how do you take it from 7 to 8 figures?
I was talking about going back to the basics, and I'm going to keep on harping on that because, that's how I started. That's how everybody starts. You start from the ground. It's ground floor, and then you rise to the top. And then going back to how do you unlock strategic growth for your business? What does that look like? What I found, and it took me years to find this, not even at my first company, Truck Park, did I learn this. I actually learned this many years later. Maybe I'm even learning it this year. But again, going back, how do you unlock strategic growth? And the way I found it is channel partnerships. Because if you believe in the company, you believe on your growth and your vision, you got to convince and sell to other people to believe in your growth and your vision. And if you can get that, that's a channel partnership. That is another company believing in your product and your vision so much that they are saying, I'm going to take the risk to sell it back to my customer. And if you can do that, that is going to be, and then it should be at least 10 to 15% of your revenue, of your revenue and your quality. When I was going back to quality revenue, that's what your company should be, at least 10 to 15% channel partnership. And then the rest of it, of course, you can look at different, revenue growth strategies. It could be, just having customers. It can be, selling, whether it's through technology, through SaaS, or it can be through transactional, revenue. But I would say 10 to 15% of your company should be channel partnerships.
Do you think, Anthony, that a lot of people overlook the value in a loyal customer and they try and add more customers than they need from that perspective? Where it's like, I think people overlook the one customer at a time mentality out there and the value that one loyal customer can bring. Because like I look at it in just like for context in today's freight market, again, I don't know of a ton of people who are adding a ton of new shippers out there at any given moment. I know that at this time, when we're out there and you are adding a customer, like it is so much cheaper to keep a customer than it is to replace a customer, right? And then when we're looking at it from a business development and a sales cycle and stuff like that, it can take years to onboard somebody. So it's like, instead of just growth at all costs, maybe it's like, hey, how do we make sure that when we do onboard somebody, they stay with us? We service them at such a high level that they don't look out there. And, it's like, what are your thoughts on stuff like that?
Depends on your business model. It's how you're growing and building your company. If your company is based on transactional revenue or transactional value, of course, you're going to want to have more customers because it's predicated on that. However, I do agree with you that if you're more of a SaaS related technology company, your business is predicated on service and providing a great value service. And how do you do that? Of course, keeping, don't go after everybody. Get one customer, maybe one or two customers, and focus on them. But then it can contradict or conflict in this regard, where startup companies, it's okay to be scrappy. It's okay to mess up. It's okay to fail, honestly. I'm thinking a lot of companies today, they feel like, and it's okay to feel like that too. It's that Bravo effect, right? You feel like, well, I'm middle market, I'm enterprise, I can sell to the world. I can get, the JB Hunts and the Werner Enterprises and the big boys on board. And that's not going to be a problem because I'm the biggest and the baddest and I am the best because it's my name and, there's nobody like me. And I think that mentality of like trying to go out and get everybody all at once, it's a huge failure at the end. So, just to make my point here, if you are a technology SaaS company, yes, you want to work on one customer, just focus on them. And the scrappiness part of it is just learning. It's learning as you grow. You're going to do a lot of customization, especially if you're technology. You're going to be writing a lot of code. The enterprise customer is going to have a lot of grocery lists of demands on what they need and what they want. But if you eventually kind of get into that point where you're actually providing so much value for them, they're going to look at you not as a startup company or a scrappy founder. They're going to look at you as somebody that they can rely on. And that is when you're going to unlock that growth, and you're going to essentially look at maximizing returns for your company.
Have you ever heard of the book 10X is Easier Than 2X?
I have heard of it, yes.
Now, that's a book that I would highly recommend anybody to read, but especially if you're at that phase where maybe you're crossed over, like a 500,000 in annual revenue and something like that, and you're like, you want to go to 10 million or whatever that looks like, but you're like, oh, I just got to make that next level. And what Anthony's describing there, and this is something that again that we were going through in my brokerage, right? Is we were out there kind of just chasing, and we were trying to go after everybody, and we have become very, very refined in who we're going after. And they talk about it inside of the book 10X is Easier Than 2X is you're only a couple of tweaks to your operation away from actually hitting those things. So it's like if you're $1 million company right now, it's going to be a lot easier to get to 10 million a year than it is to get to 2 million a year. And it is just a couple of tweaks of internal. So like when you're describing some of those situations, Anthony, what are some of those things that you're working with your clients on to kind of, was it like process refinement? Is it more refinement on the sales side of things? What does that look like?
Information gathering is number one. That's very important, just to understand, about the partnership, about the customer that you're going to work with. You want as much insight as possible on that relationship before even having a conversation. So that's probably number one. Number two would be, research, market research, and benchmarking analysis. You want to understand too, if you're going to sell to this customer and you're going to want to create this value, you're also going to want to make sure that you're competitive with them, not only just in pricing. I think a lot of people look at benchmarking as pricing, but it's also in what you can do different than your competition, how you can be a key differentiator in the market. So again, information gathering, and then also benchmarking analysis or market research. The third thing is, I guess, it's just, having that principle, that foundation, understanding the customer's needs and wants. They're going to be needing to pivot. They're going to have to work with the market and how the market shifts as well, especially the larger that I learned as well. This is a learning opportunity for me, but the larger companies now that I'm working with middle market to enterprise. They still need help because they've grown and they've built their company based on, multiple revenue streams, multiple channel factors, different partnerships, talent acquisition, retention, et cetera. But they look at what's the next level of growth. How do I get from a $500 million company to $1 billion company? And what does that look like? And so we were talking about earlier the 10X to 2X book, which I have not read yet, but I did want to share as part of like a segue, a good segue, is if anybody has not read this book yet, right? It's the 5X CEO. There you go. You can see it's by Samantha Allison as well. So again, I can share this later on. I'll write something on LinkedIn, but the 5X CEO is going to be pivotal in even for startup companies. Now it is about CEOs in private equity, right? And how they're essentially, going back to unlocking those growth strategies and then how they're building out practical frameworks for success. But it can also teach a startup company, what is my life going to look like in the future? And that's going to be right here in this book. So that's what I close with.
What are your thoughts on maybe, for the, like, I'm trying to think of the best way to word this, from a founder to not be in a CEO role, and maybe they're better at sales than anything, and like kind of hitting that growth plateau where, bringing in an outside CEO who's built companies from $500 million to $1 billion, or, 50 million to 100 million, bringing them in and then learning on the spot while that's going on.
It's expensive. So you need to do your due diligence, right? You should do, everything about building business is about due diligence. Like really understanding on who you're bringing into the fold. I mean, if you're a founder, this is your baby, right? Like this is something that you built from scratch, something that you want to hold on to until an exit plan or go to market. You want to bring in the right individual, right? Especially a CEO. The CEO is going to essentially be, I mean, if you're a founder and you're stepping away as a CEO, either you're taking another role in some sort of executive role with the company, or you're stepping down as chairman of the board. But now you're going to want the front-facing person, the executive officer, right? Somebody who's going to execute partnerships. They're going to bring in capital. They're going to provide value to you, but you want them to be somebody that you trust as well. If you don't trust them, that's not a good move, right? Like building a business is a chessboard, right? You're going to bring all the right pieces. You're going to make the right move. You essentially want to win. But if you don't move the right chess piece, right, you're going to lose. And it's essentially going back to the metaphor of bringing in the right CEO or the right board of directors. You want to know who's going to be on your board, because board members could cut you out. And if you don't have voting rights anymore, then you have no ability to control your company and you lose it. So make sure you bring on that right individual, whether it's a man or woman, whoever it's going to be, needs to be the person that you trust to run and operate your company.
Do you think people are lost in where they want to take their company, Anthony? And this is where some of these issues come up, where maybe they don't want to admit that they have a plateau and how big they want to grow their business. So like they go all in because they're like, oh, we got to build $1 billion company because everybody's building a bit. Like that's just seemingly what everybody is. But like deep down, they're like, no, I want to build a company that employs 50 people. We're the best at what we do in the state of Arizona or wherever they're located at. Do you think that more companies kind of have that identity crisis that's coming from the founder, where it's like, in today's internet age, everybody's a billionaire, right? Everybody's got Ferraris, everybody's got private jets, and you're kind of sitting there feeling like that's not true. So do you think that, the faster a founder can get to like, no, this is where I want to take this company. I want to be the best at what we do in the state of Iowa and stay there, that it's going to become a lot more clear for them, do you think?
I think every founder has an identity crisis when they're building a company. I think they don't know who they are until they hit a certain revenue milestone or growth metric. I don't know what that is because it's not a magic number. And, it just depends on the company, right? I think in the beginning, just like me, I was 26 years old building my first company. My identity crisis was, what am I actually building? And okay, I have somewhat of a good product that is helping the independent drivers and owner operators find safe and secure parking, but I don't know who else I'm going to sell to. And I don't know what I want to do in the next 5 years. And I don't even know where my business will be in 5 years. Is it going to, be on its own 2 legs, or I'm going to have to bring in people to essentially hold and prop up my 2 legs. So at the same time, I think, to answer your question, I think everybody has an identity crisis. You get to a certain point then, and then you're like, okay, this is what I'm going to build. This is what I'm going to do. We're going to focus in on this particular, business model, and we're not going to shift from there, because forever from there, we're going to be like the next Coca-Cola. We're going to sell you soda pop, or we're going to sell you whatever you want to call it, Coke pop, whatever. At the end of the day, that's all you're going to buy. You're going to go to the store and you're going to buy Coke because you like it, and that's it.
Mm-hmm. Now, I think that's one thing that, that identity that a lot of founders are trying to really understand who they are as an operator, and you might start looking and thinking a lot differently than you once were, right? Like I know the man that I was 5 years ago, nowhere near who I am today, even 2 years ago, right? It's that constant evolution and really understanding where you are and where you want to go. And for me, it's like I think that it is the journey, not to sound too hippie, but it's like the journey that most founders are on. I think a lot of them don't understand. At least I know I didn't understand exactly what I wanted to do early on in business. And I just feel like now, 5 years in to being self-employed, like I literally feel like now, and this is like when I say now, you guys, like the last couple of weeks, this realization has came to me where it's like, no, I know exactly the direction that we're going now, right? Like it took us a long time to filter through and jump through a lot of hurdles to get to the point now where I'm very clear in what I'm doing in my day-to-day now. I'm not as scattered as I once was. And now it's like, I know the direction that we're heading, and it's okay to go through that. Right. And so it's like, I guess it's for me, it's like you're not alone when you're feeling that way. And I feel like that's one of those things that, to one of your points earlier, Anthony, like you're going to fail, you're going to figure it all out as you go. And once you get there though, like that's when I think you got to like double down on what you're doing. Once you get that feeling that I'm feeling now of like that clarity aspect of it, now it's just balls to the wall.
Yeah, I love it. I mean, that's the way, that's what people want to hear, right? But also you want to be effective, right? And to provide value, you're also going to tell people what they don't want to hear. And that's okay.
No, very true, man. Well, hey, dude, I appreciate your time. I'm not going to let it go this long before you're back on because I just fucking love shooting the shit with you, man. It's always great having you on here. And hey, how does anybody reach out to you though, if they want to find out more about what you got going on now?
So I have a website now. It's just anthonypetitte.com. Last name is Petitte. So anthonypetitte.com. Reach me there. Send me a DM on LinkedIn. I love helping companies. I mean, it doesn't matter the size. Again, startup company, middle market, enterprise. If you need help, you want to look at business strategy, how to build transformative growth, then let me know. I'm your guy. Anthony's
built, scaled, and sold companies before, you guys. He's walked the walk. He's done it. And I will always stand behind who he is, not only as an operator, but as a man as well. He's one of the best out there. But that is going to be it for today. You guys, I'm going to be on site in Austin, Texas next week, Monday, Tuesday for the NMFTA Cybersecurity Conference. But if you guys can't find Anthony or his company, hit me up. I will gladly put you guys in contact with them. I appreciate you guys. I love you guys. And we'll be talking to you soon.
Came back with a bang. Window down, yelling out money, anything. Hey, ooh, got the foot on the gas. Pedal to the metal when I'm getting to the back. Hey, got the foot on the gas. Pedal to the metal when the